Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for coming on.
Thank you for having me.
Well, the U.S. is seeing a big rise in coronavirus cases, but still with some upbeat data. Stocks were strongly higher on Wall Street. What's the story in the global markets?
Yes, as you said, U.S. market rebounded quite sharply yesterday. The Dow Jones was up 2.3%, S&P added 1.5%, and NASDAQ was up 1.2%. The concerns were related to positive test results, the new additional the pandemic numbers are rising at rapid pace. Clearly, the biggest rise is coming from U.S., and obviously that is a major negative. However, though, a lot of the numbers related to the economic numbers were coming in at better than expected. That has resulted into market rising faster, market rising back again. If you look at the sentiment related to the positive news is related to the home sales, and the home sales were up 44.3%, which is a record number. Clearly, there's a huge amount of liquidity injected into the system that is resulting into the relatively better numbers. If you look at savings ratios of U.S., it remains at 23%. And most likely that ratio should fall, resulting into additional boosting for the consumptions. So if that's the case, then definitely the market can rise further. However, though, Federal Reserve Chairman Powell said that the U.S. economy faces extraordinary uncertainties in regards to the containing the spread of COVID-19 and how that impacts the economy, which means that, though, not necessarily negative news, meaning that Fed as well as the U.S. government will continue to boost the economy through continuation of liquidity injection as well as the fiscal policies. So I think the market is depending on that rather than concern about the patient rising at rapid pace.
Right. Well, Korean shares are higher today, too. The KOSPI breaking through the 2130 mark. The KOSDAQ up as well. What was driving that trade today?
Yes, from the U.S.'s positive news, also some news coming from Korea itself was positive. As mentioned earlier, the business survey index, BSI, came in at rising trend. It came in at 51 for June, rising from the 49 in May. And also the non-manufacturing companies numbers were coming in at 59, rising quite significantly from 56 level. So definitely sentiment is improving. Also the Chinese numbers are coming out, which definitely affects positively on Korean equity market. China's service growth rates were coming in at 4-month high. The numbers at 54.4. It's actually expansionary at this point. And also the manufacturing numbers were coming in much better than expected. It came in at 50.9. So it's once again expansionary versus previous month of 50.6. Market estimation was actually 50.4. So clearly numbers are coming in better. So if the Chinese economy is doing better, then obviously that has positive implication for Korean economy because Korea does have quite significant dependency on China related to the exports. And because of that, Korean KOSPI was up about 0.7% for today, and KOSDAQ was up 0.45%.
Well, now in May, because of the pandemic's impact on exports and so on, we've had a decline in production and investment, but consumption, it seems, has recovered. What trends do you see out there in the economy?
Right. Clearly, the Korea's dependency on the retail sales and consumption has grown quite significantly in the past several years, and in terms of dependency on export, also has still very significant part, but in terms of percentage-wise has declined. So if you look at the numbers, the negative numbers are coming from the industrial output numbers, which is contracting year-on-year of 9.6%. Also, the construction numbers were coming in and declining pace of 5.8% year-on-year decline. And these numbers are definitely showing a negative implications. But nevertheless, the retail sales of South Korea rebounded 1.7% year-on-year. Clearly, that is a positive implication because the consumption percentage of GDP well exceeds 65% of the total GDP. So clearly, that is a resilient numbers. With the continuation of government boosting measures, we think that the retail sales number remain to be quite reasonably okay, meaning that it will show year-on-year growth rate at least. The IMF have estimated that Korean economy will contract by more than 2% year-on-year, but that number is much less than the global economy as a whole. And hopefully, with the second half global economy recovering, resulting into higher export numbers, Korean numbers would probably be doing relatively better going into the future. In any case, right now, the higher dependency on consumption and retail sales is actually making positive implication for Korean economy.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for coming on.
Thank you very much.